Welcome to today's Investor Market webinar, and I'm joined with Kelly Marks and Vanessa Pierce from Melbourne. Welcome, guys.
Thank you, Ash.
How are you?
We're good, and we've got Jess, who isn't joining us today because she is off on a lovely leadership retreat in Philippines, which is going to be beautiful for her. So she'll join us next time. So Melbourne has recently, I shouldn't say always, recently had a bit of interest, and I am really curious to get in to find out what's happening on the ground, because there's been some posts on some of the bigger Facebook groups, and it's one of those things where everyone's got an opinion and it's very confusing. And I can absolutely understand how, if you're an investor looking for a property and you're on some of these bigger Facebook groups, you are going to get so overwhelmed and confused as to, do I buy there or don't buy there? And so that is exactly why we have these webinars, so that you can get some opinions from the people on the ground, not only because they're on the ground and they're experiencing sort of these properties every day, but you're also working with these clients and knowing exactly what sort of returns they're getting, what they're buying, all of those extra details. That is really important for investors. So we've got a few people joining us today. If you're joining us and you have any questions, then feel free just to pop them into either the chat or the Q&A, whichever one works for you, and we'll get them answered as well by Kel and Vanessa. So first up, I'll start with Kel, with some trends that you're seeing in the Melbourne rental market. And if you can sort of just talk about sort of the areas as well that you are in and then you're noticing these.
Yeah, definitely. So predominantly I service the northern suburbs of Melbourne, but I'm seeing a lot of investors that are coming back into the Melbourne market from interstate. So I've been doing a lot of property profiling and investor support for them. So they may have done their own research on particular pockets and areas that they're interested in, and then we can go on their behalf and inspect the properties, do some video walkthroughs just so they can visually see, and give them some feedback as to what tenants in those areas are looking at, their returns, if there's anything that we think needs doing for minimum standards and so forth. A lot of the pockets that we're seeing through the north are areas like Broadmeadows, Dallas, Coolaroo. They're big hotspots at the moment. And when I am attending these inspections, I'm seeing probably in excess of 30 groups per open for inspection. So they are really hot pockets that I'm seeing through the suburbs that I work in. Probably investors, and because of the price point, first homeowners as well in those particular areas.
What price point is like an average for an investor in those areas?
You're probably looking at around that 650 is probably top end of what most investors in those areas are looking to spend. Because they are hot, some of them are going a little bit further above that 650 towards that 700. In these particular suburbs, they are older suburbs on bigger plots of land. So I do encourage investors, when they are looking at those sorts of properties, to make sure, as far as any maintenance or anything that needs doing to meet those minimum standards, that they do have a little bit of cash behind them in order to meet that.
Yeah, okay. And what sort of, if they're spending around that 650, what sort of rental returns are you seeing on that type of property?
Generally the low fours, we're
Yeah.
probably looking at for properties like that.
So the rental yield doesn't sound strong, but would that be considered pretty okay for the area?
For Melbourne, anything with a 4 in front of it at this stage,
Yeah.
I think that you're doing pretty well. In these particular pockets, depending on the owner's plans for the future, they're probably long-term investment prospects I would be thinking about in those sorts of areas. But it's up to the individual as what their game plan is and what they're looking for the property.
Fabulous. And Vanessa, what about yourself? The areas you're working in, and what sort of trends are you seeing with investors?
Yeah, really similar to Kelly in terms of those Meadow Heights, Coolaroo, all of those areas, really similar. That is where a lot of the investors are coming in to buy established property that I'm finding. What I am finding, like what Kelly said, there's a lot of people attending those opens, and I am seeing investors getting priced out of that market already. So I think for those investors that think they're coming in to snag a bargain, while I still think it's all really reasonably priced still, I think those bargain days are not here. So just to be really, I guess, realistic with what they can expect to achieve with their budget. I also do a bit in, I guess, the outer suburbs of the west and the east as well. The east, I find really strong yields as well. Up in the high fours it yields really well out there. Great renters. I guess the eastern, like I'm talking Clyde, Cranbourne, those areas, they're quite established hubs out there as well. So it's really good. And also I'm finding townhouses in the inner city ring are doing really well. And those are yielding in the early fives, which I think is great as well. So yeah, people are spending anywhere between $550 to $650. These are for established older style townhouses as well, not the newer side of things. And yeah, we're having great results with those. Out in the west, that I still find there is quite a lot of supply out there in terms of rentals, depending on where they're headed. So I'm just, when I am speaking with people who are looking in those areas, I'm just asking them to be mindful on what they're purchasing and what the difference is with their property. So, I'm finding with a lot of new builds out in those, I guess, greenfield estates, is they have no laundries. We've got Euro laundries in 4-bedroom houses, and which I guess can be a little bit off-putting for some renters. So if you are going into an area that has a high supply of property, just making sure that, whether it be the fixtures, the fittings, how the yard's presented, like what is different for their property to stand out, to make sure we can get great renters and not be sitting on the market for too long out there as well. So
I feel like a Euro laundry is the perfect way to be accountable for your washing, because you really don't have a space to let it build up, do you?
No.
I don't know. Every time I see them and I think of myself as a mum with, a tradie husband and 2 kids, it's my worst nightmare. So
I would like the pressure of not being able to let it build up. I like the sound of it. Always looking at the positives of the Euro laundry. So if we can just talk about the yields for a little bit, and I'll get Vanessa you to start with this. What's the general consensus with tenants on the ground? Do you feel like that yield is still like affordable? Are people tenants feeling stretched with the rents? Is there, do you think that you're going to see a bit more room for the rental growth in some of those areas based on the type of tenant that's there?
I think it depends on the area. I think there's still a lot of room for growth in terms of affordability in, say, the north and the west, especially in those outer pockets like Beveridge, Calcalo, those areas. I still think there's a lot of room for growth out there. I just say that because, you're still seeing houses advertised for $450 per week, which in the scheme of things is quite, wouldn't say cheap, but it's definitely on the lower side. When you're heading out east, we're talking properties, between $650 per week. I think you would probably have it would be a little bit slower out in those suburbs. They're sort of capped at, I'd say anything above 700 starts to become a little bit unaffordable for families, especially when they're not, it's a little bit further out. It's harder for them to commute into the city, I guess, for those higher earning work and jobs and whatnot. So just taking into those factors as well. I still think there's a bit of room. I don't think it'll be as quick and fast as it was post-COVID, but those things, that growth was a bit out of the norm. So I think it's steady now, but I don't think it's skyrocketing like it was sort of 18 months to 2 years ago. So yeah.
And Kel, what are you seeing with the existing tenants and the growth when you're doing renewals? Are you doing big increases, no increases, minimal? Like, what does that look like for investors?
It depends on the area, to be honest with you. If you're looking at pockets with new builds and a lot of new development, when there's a lot of stock available in those particular pockets. If we've got renters and rental providers and landlords that are wanting to renew and keep a good tenant, it's very minimal, if anything at all. You don't want a renter to vacate the property for, say, a $20 a week increase, only to be sitting on the market paying letting fees and advertising and all those sorts of things again, and obviously eating into your return. So in those sorts of areas, it's very minimal. In more established pockets, depending on how long the tenant's been there for, I've taken on some managements of properties from other agencies where rents haven't been increased in some time, so they may warrant a $50 a week increase. Owners are also mindful of the cost of living, not wanting properties to be vacant. So if a renter believes that the $50 a week is unachievable for them and they may have to move on, owners are happy to sort of negotiate to keep those renters as well.
Well, that leads us into then the leasing side of things. On average, what are you seeing, Kel, with so an investor buys a property, they want to rent it out. Are they leasing out quickly, slower? How many people coming through home opens for your standard bigger block, an older style home? What does that look like?
In the areas like your Broadmeadows and Coolaroo, I'm probably seeing a lot more attendance at the open for inspections at those particular properties. Probably
What's the number?
You're probably looking around 20 groups of tenants coming through them. Not to say that I suppose the strength of the applications might not be there in those areas for unemployment, affordability, and those sorts of things, just purely because of the demographic that does come along with those areas. The numbers of the attendance is there. We're probably generally leasing within 7 to 14 days, depending on what the quality of the applications are in those areas. In the newer build estates like your Beverages and Calcalos, we're a little bit more strategic with open for inspections, private appointments and those sorts of things, because we know there is so much stock in those areas to be able to lease sort of fairly quickly and be accommodating.
Yeah, okay. Vanessa, we spoke briefly on the bigger Facebook pages where there is, everyone likes to have a personal opinion on it. With Melbourne, I mean, I guess I reflect sort of back on Perth, where Perth, it was pretty clear that everyone back in the time, 4 or so years ago, everyone was like, yes, buy Perth, buy Perth, buy Perth. Where I'm finding in Melbourne, a very strong, half are saying yes, you should, and half are saying no. Is there any reason why people are sort of like really like 50-50 on it?
I think the only reason why people are still 50-50 on it is based on all of the noise that's come around from our legislation, our government, all of those things. Everyone's got their opinion. I find, I think that's basically all it comes down to. And I guess, land tax and everything that has come in Melbourne, has affected owners. But the ones that, we obviously have portfolios of owners, and a lot of our owners are interstate. Their investments are working really well for them. So I think if people do have a poor experience, maybe they need to get a second opinion on whether the rent's not yielding right, or maybe they don't have the right renters in there from the beginning, or just speaking with someone with a different outlook, maybe when it comes down to like legislation changes and things like that, not always having a negative spin on it. But I feel like it's changing a lot. I feel like a lot of people and a lot of groups, especially, if we deal with buyers agents interstate, it's funny, Ash, a lot of the investors that I deal with have invested in Perth, seen a really, really good result, and now they're moving on to Melbourne. So I still think it's really early days here in Melbourne, but I think it's going to change pretty quickly. So
yeah, I think we found that they first started in buying in Queensland, then they've moved over to Perth, and now they're over in Melbourne. And we've probably all got the same clients in the same portfolio. And then I did a webinar on Darwin a couple of weeks ago, and I was sort of saying, I wonder whether Darwin is going to be the next one on the list. Maybe we should all go buying Darwin before it all sort of starts getting busy there. But yeah, definitely people, that's what I'm finding, I guess, on the ground. I find it very clear, like to look at those trends that are happening. And again, same clients, but so different in terms of legislation and growth. And I think everyone that bought in Perth has done well. And it's important that they know that they're not necessarily going to get that same result elsewhere. And hence why it's really interesting to hear sort of how it's going with you guys. So, Cal, are you finding that with last time we spoke, which we said was about 6 months ago, there was a bit of talk around the legislation. Has that calmed down a bit? Is it still quite something that makes landlords panic, or worried about?
I think it has calmed down. We've ridden that wave, sort of the first cycle of your compliance gas, electrical, smoke alarms. That's done. It's more the new investors that are coming into Melbourne and literally just making sure that they are aware of what the minimum standards and compliance regulations are. We do have some changes that are coming in again in November, if not before. They are only very minor in comparison to what Melbourne and Victoria has been through. So just be mindful that there are some changes. Ask your property manager, they should be all over that. But I think for the most of it, we've ridden that wave. Everybody has calmed down.
Yeah, great. Are you finding the same, Vanessa?
Yeah, absolutely. I'm always really calm with legislation changes. I think because I've worked interstate and match they all seem to match each other at some time. So it's just a matter of us changing our processes or like altering our processes to make sure it fits in line. But I'm never concerned. The more black and white it is, I think it's better. There's no grayness anywhere. So it makes it pretty clear on what we have to do and what we can't do. So for me, it's the only one that might be of concern, I guess, is the abolishment of the 90-day end of lease for the initial lease. Is probably the only one that I have issues with. But in saying that, it just comes down to our process at the beginning and making sure we put the right renters in place from the get-go. Yeah. And so as long as we're doing our job and doing it right, there shouldn't be issues for anybody. So
I think it's really important for property managers to ooze the confidence when it comes to these changes, to not panic investors and landlords, and give them that confidence that you're in control of it. We just have to make sure we put in there, like you said, extra little steps, be mindful of the risks of, what could happen or what might happen with the property with the new legislation. But it does come down to confidence, I think, and making landlords feel a bit better, and also educating them enough to know, because it is, again, my clients would just assume that our legislation's normal and come over to you guys and then question or doubt their property managers in Melbourne, and it's like no, they're correct with their legislation. It's just different. So
there's so many investors that don't actually understand that it's a state regulated body. So
which is very annoying for all of us involved.
Yes.
It's a lot easier. It'd be a lot easier as long as you took WA legislation. We're pretty lucky over here. Now let's talk briefly about any horror stories or any mistakes that you've recently seen any investors make. We don't talk about this from a negative point of view, but it's more just to educate, I guess, clients to say, well, this is actually what happened to one of my clients, so be mindful of this happening. So, Kel, have you had any situations where it's been a little bit tricky with landlords?
I did have one recently where an investor, again from interstate, had purchased an older style property in fairly original condition. Probably hadn't done their own due diligence of building and pest inspection. They purchased at auction, so there is no cooling off. I came into the picture just before settlement, so they had purchased. They weren't aware of our minimum standards and compliance, attending to the maintenance and things that needed to be done in order for them to meet those standards. We've probably spent about $15,000 to bring that up to minimum standards and make sure that that property is compliant.
Oh, that would hurt.
Yeah. So we're through that now, and the tenants I can't say we're understanding. They weren't impressed by it, but you just make the best of a bad situation, work through it. Our trades were amazing and on top of it. So that was great. And we're through the other end now, but just making sure that you're doing your own due diligence, building and pest inspections, at least just be aware of what the minimum standards and compliance is in Victoria. And if you are looking at buying an older style property, you don't know what's come before you. So make sure for the what if or just in case you do have a little bit of a buffer.
Yeah. Would it be, I don't know if this is correct in saying or not, if an investor's buying a property that's already rented, could they assume that it already meets the compliance or not
So
necessarily?
if the property is already rented, that owner and property manager should have the compliance certificates and it should meet those minimum standards. So
Yeah.
the conveyancer is more within their rights to ask for a copy of all of that. And it should transfer with, if there is a tenancy in place, it will transfer with the tenancy across to the new owner. So
Okay,
if they've
cool.
still got another 12 months to go on their compliance, we just get the copies of the certificates and then it's due in 12 months' time again.
Okay, excellent. And what about you, Vanessa? Any sort of horror stories or mistakes you've seen investors make?
Yeah, probably really similar to Kelly in terms of similar thing. I came on the scene after they'd purchased. We're working our way through probably about $15,000 to $20,000 worth of works. In saying that though, this owner's fantastic. He just gets it all done. No issues, no concerns. We've got good trades. On the other side of things, I have come across a number of investors. I know everybody wants to invest, but just really making sure that they do their numbers prior to handover or prior to settlement. And we do, in some cases, before we've even hit the go button with settlement for marketing, they're already stressed about finding a renter and the expenses. And so if you are concerned and if it is a tighter budget for you, just to reach out to one of us or a property manager just to run through what that looks like. So how much those safety checks cost, how much your marketing will cost. Kelly and I will know what the average vacancy is for majority of Melbourne, so we can run that. We can run through the vacancy with you as well, just so people have a realistic expectation on what that might look like once they hit settlement, and just making sure that they do have that buffer there. But I think with the right guidance, most investors are doing the right thing. The horror stories are pretty few and far between, if you ask me. In my 10, 15 years, it's been very, very minimal horror stories. So
Excellent.
yeah.
So what I'm taking from today is making sure that the rental yield has a 4 in front of it. Ideally, making sure that you do your due diligence and checking to see if it meets those minimum standards, and speaking to a property manager to double check that, because that does sound like a very hefty exercise. That's going to sting a lot of people. And my last question for each of you would be, if you were approached by an investor wanting to buy, and again, always disclaim this is just a personal opinion, nothing more, no crystal ball that any of us have got. But if you were to personally, you have a family member reach out to you and they're wanting to buy an investment property, how much would they spend? Where would they be buying? And what would you be looking for? And Kel, we'll get to start with you.
Oh, that's the $1 million question. I would love a crystal ball because I'd be investing everywhere all over Melbourne myself. But where I am seeing, I've got a few clients that are looking in Bendigo, sort of probably that, again, that 6 to 650 seems to be the sweet spot for the entry point. We've got a few that are looking at in Bendigo, the northern suburbs of Melbourne, sort of anywhere through from Craigieburn even to Wallen and Kilmore, which is a little bit regional. And we've got quite a few that are popping up in Frankston. So that's on the Mornington Peninsula. They're probably the hot spots that I'm seeing a fair bit of activity in at the moment.
Excellent. We didn't touch on Frankston, but we'll do that in a second. What about you, Vanessa?
Depended on my budget. If I had a budget of around 650, I'd probably be going out east, only because it yields really well out there, and I find the renters are really quality as well. If I had a bit of a higher budget, I'd be looking a little bit more in the inner ring, say your Reservoir, your Thomastown, your Heidelberg West or Heidelberg Heights, just because the they're still older suburbs that I still don't think a lot of people have tapped into, and the proximity to freeways, especially with that Northeast Link, and just heading into the city, I just can't understand for the life of me how it hasn't gone through the roof yet. So that's where I'd be looking.
Oh, I reckon that's like a little secret suburb to watch out for. One thing that I was used to always keep an eye on, like we've got suburbs that you get saturated, they're saturated with investor activity. So you guys have talked about those areas where there has been a lot of activity, but the ones that really I find interesting are those ones where there's just a trickle of interest, or they're just on the outskirts and no one's touched yet. I think that they're the ones that, like, if I was to take a risk, I would personally go to those. So yeah, I love that. And if we can just finish off just quickly by mentioning Frankston, just because I saw that on one of the bigger Facebook groups today with people's thoughts on buying there. What is Frankston like a lower demographic? Is that why people sort of suggest not buying there because of the tenant quality?
Probably maybe 10 plus years ago, yes, it had the stigma around that. But down near the Mornington Peninsula, so you've got fairly easy access to the beaches and not too far from the CBD. A lot of the buyers agents that I'm talking to and working with are buying in those areas. So if the buyers agents are looking in there, that's probably where I want to be looking to, Ash.
Yeah, absolutely. I always used to do that as well with my VAs.
Yeah.
And what about you, Vanessa? What's your thought on Frankston?
Yeah, similar. I think it's like anything. If it didn't have the stigma around it, it wouldn't be at the price point where everyone was buying. So I think you've got to take that into consideration and look at the surrounding suburbs. And like Kelly said, you are so close to the water, which, there's only so much of, especially in Melbourne. And then, you still have easy enough access into the city. So at some stage, you would dare think it has to change, especially when you look at some of those areas that surround Frankston. So
it sounds similar to Rockingham in WA, which is the reason why a lot of people bought down there, and that's where the biggest growth has been in our area. And because it's near the water, it's near the beach, beautiful beach as well, but lower demographic. And I used to have a really quirky way of referring to it to my clients when they would call up and they say, I want to invest there. And the way that I describe some of these areas, maybe like Frankston and all that, is I would say, put it this way, if I was on a dating app and someone asked me where I lived, I wouldn't disclose that suburb.
It's a bit like where I grew up on the centre. So I grew up on the Central Coast in New South Wales, which most people will think Gosford and think, oh my God, yuck. And then all the Sydney-siders discovered it with their holiday homes, and now you couldn't buy anywhere there for, you look at some of the beach suburbs there that were awful, and now you can't buy there for under $1.5–2 million. So and water, it'll be okay.
Exactly. And that's the thing. I think as property managers, we're pretty good at being able to give a personal opinion and a professional opinion. So, personally, some of these areas we wouldn't necessarily live in personally, but professionally, they're performing really, really well. And I think that that's a really important way to describe it to clients. That it's a personal and a professional opinion, not just, one or the other.
Mm-hmm. Yeah, I think it's important to note for houses, if you can get that, like you said, a yield with a 4 in front of it. And for townhouses, I would expect a 5. So, and apartments in the 5s as well. In a city, they'll always yield really well. But yeah, the growth is generally a bit slower. So,
well, thank you for joining me today and sort of giving that extra information. It's just so valuable. So I really appreciate your time. And I'm getting very, very good at these webinars because I am right on the 10:30 mark, which is good because I tend to talk and go over. So we're doing very well as a group, I think, making sure we keep it in line with the time that we've set. The replay will be available for everyone to watch, or if you want to forward it on to anyone as well. But again, thank you for your time, because it is super important having that on the ground knowledge. Makes it a lot more clearer, and I have a lot more clarity about it as opposed to going down the Facebook page route. So thank you.
Thanks for putting this on again, Ash. Thank you.
Thank you. And I'll see you guys in 6 months, and we'll do it all again.
Perfect.
Okay, sounds good.